Hello and welcome back to Core Finance. I'm Matt Brown. I'm with Mike van Dulken, who is Head of Research at Accendo Markets, and we're looking at cable, the pound versus the dollar. What's going on here, Mike?
Well, look at this fresh day. This is actually a weekly chart, so we're going back quite a way. And as always with technical analysis and drawing trend lines, it's often case of best fit. Now, you can see there I've actually left the high wicks of a couple of candles going back late 15, early 16, because we get many more touches right the way through there, which I think is a better fit. And the question now, where we trade now, is this a breakout or is it a tease? And you know, this could be quite meaningful for the FTSE, given that it's so currency sensitive between the dollar and the pound. Now, as I mentioned in our chat earlier about the DAX, the dollar had bounced. That had given perhaps put a bit of a cap on the euro, which was reviving interest in the DAX. Now, that dollar bounce hasn't actually generated any sterling weakness, which would normally help the FTSE. If anything, sterling seems to be rebounding actually versus the euro, which had been the big story, had been a case of euro strength. So at the moment, we're watching this one carefully, because any further upside and significant breaks, I mean, I know 135 seems a very long way away. You know, anything close to that would be probably digested as a hindrance for the FTSE and maybe prevent it from delivering as much recovery upside if it does head on up. And I think we look at the FTSE chart later on compared to the DAX, which may do a bit better, having been really dampened, have sentiment dampened on it from the euro strength. So keeping an eye on that. You know, if we did flirt with 132 during July for a little bit, if we start seeing those higher numbers, that would probably confirm the breakout, which could mean that, you know, if we've seen the worst of it. Don't forget, we've got the Bank of England this week, talk this weekend about them giving an even stronger message that consumers and businesses just are being far too complacent about believing lower rates around for longer. If they step up that message and back it up with more people more committee members voting in favour of a rate hike, we probably have to take that on board and consider that we could be facing higher rates and indeed further rate hikes over the next 2 or 3 years, I think, is their horizon at the moment, which could indeed fuel the pound further and send this rocketing.
Understood. We'll look out for that, and we look forward to the Bank of England on Thursday.
Indeed.
Mike, thank you very much for joining us.